You have to be careful here, guys, especially in October. And it's not because this is where we see all the crashes happen. It's true. We just broke through the lows, and yes, we're up a little bit today, but we're in dangerous, dangerous territory. And you have people going to see the statements for the first time, and they're not going to be happy. At the end of this month, they're not going to be happy. Yes, a lot of us have access to online. We see but some of them, a lot of retirees that don't have working power are watching their home price start to decline. Again, it's still up a lot, but hey, my home price is coming down. Now my portfolio is coming down considerably, down 20% plus, likely across the board, and really just got hit in September. What are you going to do? They're going to be like, wow, all right, I'm going to go to cash or buy the 2-year, generate 4%. Not bad. Also, if you look at mutual funds have until October 31st to lock in capital gains. Of course, it's not going to be capital gains. It's going to be losses that they're sitting on. So that's for tax purposes. Individuals have until the end of the year. Mutual funds have until October 31st. It makes sense for them to be selling like crazy because they're sitting on massive, massive losses, many of these people. You can offset your gains, which is for selling. You're going to see lots and lots of selling and probably selling at the lows. So if you think something's down 25%, it's trading at a 9 PE and it's growing those earnings by 10%, you're like, this is a great deal. Be patient. Wait, because you're going to get a better deal. This is going to happen throughout October. Especially with funds who, 90% are underperforming and underperforming significantly? And this is going on during earnings season where many companies are going to be lowering or removing their guidance like FedEx did. Since every sector, one by one, is going to experience what the housing market, the chip sector, has just experienced. Massive demand, and out of nowhere, within a month, month and a half, 2 months, it shuts off. Demand destruction. That's what happens when you raise rates at this pace, this fast, this quickly. And while you're seeing this massive destruction in demand, consumers closing their wallets, what's happening? People are flooding into the dollar, which is up like 20%, where every 2% move higher in the dollar usually results in a 1% decline, or it's a headwind in earnings. 20% the dollar. So you're going to a 10% hit in earnings. Earnings, if you're looking at the analysts, which is what I do, Daniel does, we look at this, we look at earnings, they're not lowering. They're lowering, they're not lowering fast enough. And that's why you're going to see so many of these companies say, you know what, we're removing guidance, because you're going to be able to get away with it. FedEx warned, you're going to see other companies warn and say, we need to wait and see, because we really don't believe that, our earnings just got destroyed. We're seeing demand come down for most companies throughout most sectors, and yet we're watching the Fed tell us that they're going to considerably raise rates further and keep them that high through 2023 into 2024 for a full year. If you're a company and you really believe that the Fed's going to do that, which you should, because that's exactly what they said, and they reiterated from Jackson Hole, they reiterated again in the last meeting, and they keep saying they're going to do it, how do you offer guidance? If you're in a housing market, how do you offer guidance when everything's getting turned off and you just went from 3% interest rates in January to close to 7% and probably going higher? How do you order your supplies? How do you build houses? Yes, you have the current contracts under, and they're going to fulfill those requirements for many of these places. And yes, you still have a supply problem where there's not a lot of supply for homes. But even in the chip sector, we're sitting on this massive glut now. Where's the demand going to come from? All these auto companies, are these people who put down $500 for a new EV that you were supposed to get a year ago, and you did this 2 years ago? Now you just realize that EV you're going to purchase is 35, 40% higher than what you were going to purchase it for. Are you going to pull that now and say, you know what, let me just buy like this gas vehicle instead of buying a brand new first generation car that it's going to get recalled at least 5 times because all these guys never built an EV in their lives outside of Tesla and scaled it. You're going to see it. You're seeing it now. Ford, the EV, almost all EVs that have been released have been recalled. That happens all the time. But even more because, the battery technology, you're going to replace the battery, whatever. Seeing lots of recalls. Going to run into lots of problems. They're trying to get these things to market so fast. They haven't been able to test them as they normally test them. We'll see. So the good news here is stay patient. Once the Fed stops raising rates, which, by the way, we've never seen the equity markets bottom as the Fed is raising rates during a tightening cycle. It almost never happens. You usually need to see interest rates top out, and they haven't topped out. They're still going higher. Maybe a little bit lower today because the market's going up. But still, the trend is higher. We haven't seen it. It never happens, ever happens. It's not going to happen this time. But for you to just randomly say, wow, I like this stock, I like that stock, it makes sense to buy this, be careful. It doesn't even matter what stock. And I thought Costco's numbers were really good. Yes, subscriptions came in a tiny bit light, but they 17% growth, I believe it was in sales, 11% in earnings, if I'm not mistaken. The stock was already down over 20% from its highs, and it got nailed on that news. Was it a fantastic quarter? No, but it was pretty good, and I guarantee that quarter is going to be better than 90% of the companies that are going to report going forward over the next month and a half. But look out. So we are going to have incredible buying opportunity, but you need to be patient. And for now, focus on some of the few things that are working. Bitcoin is working. Innovation within NFTs and the metaverse is working. You see more and more companies become purer plays on that, not just a small portion of it. Like Roblox is a great play. I mean, it's down 70%. They're still growing and still signing up tons of customers. But at $30, 30 something, I mean, it seems like a steal down here. Uranium is not going away. I mean, that demand, even if prices come down and we see what we're doing with Strategic Oil Reserve, I know President's doing, keeping all prices low into the to election season. I get it. It makes sense. I know why he's doing it. Everyone knows why he's doing it. But it's, if you're looking at what happened to these companies, what happened in Europe, they're going to make sure for the next 30 years, they're never in a position like this where one country like Russia could just pull 40% of your energy and you're just stuck on an island going, holy shit, what do I do? You're sitting there with one of the best options in the world, safest, cleanest 24-hour baseload power available. That means all day, all night, not when the wind blows, not when the sun comes out. And you're seeing in Europe, I mean, they're going back to coal, right? Germany's going back to coal. Many European nations go back to coal. It's not a surprise. These climate change idiots don't care, but people are going to die unless they get heat in the winter, and they're in a lot of trouble over there. It's bad. Nuclear is the option. Uranium. So I'm interviewing Amir Adnani on Thursday. He's a president, CEO, co-founder of Uranium Energy, UEC. It's going to be on Thursday. Great conversation. Make sure you listen. But that's an area that, stocks have been volatile, well off their lows, but pull back from their highs. But wow, I think this is a great market. Government supporting it now. Our government supporting it now makes a lot of sense. But let's see when it comes to the market. Let's see how much some of these stocks sectors sell off, because even biotech looks incredibly attractive. Looking at names that are trading at or below net cash. If you look at biotech, this is a market that peaked in September 2021, so a year ago. The 4 or 5 months before the overall equity market peaked. And these things have gotten destroyed. 70, 80%, 80% plus good names that are actually generating revenue. That's a great opportunity. That market's probably going to come back a lot quicker. I still think it's probably 20, 25% off of its lows, which isn't really saying that much because they were down so much, but great opportunities there. But overall, going into next month, guys, follow your stops. You have to play defense.